Okay, so today's video is going to be focusing on truly the most powerful indicator in my experience, which is the CVD. It is way more powerful than the RSI, than the MACD, where you would also trade divergences. This is what we're going to be looking at on the CVD. The concept is very similar in terms of divergences than what you would be looking at on the MACD or the RSI, but it's just way more powerful. And I'm going to explain you why and how we use it especially. But I actually challenge you, if you like RSIs and stuff like that, just pick a random day and put the RSI or a MACD versus the CVD and trade divergences. You're going to take every divergence on the MACD or the RSI and also every divergence on the CVD, and you're going to see who wins at the end of the day or the end of the week or the month. It's just way more powerful. Like it's the RSI destroyer, this CVD. Just beautiful and very simple to use as well. Now let's start here. For you guys who have been watching my previous videos about the CVD, you know that I was using the CVD candles, but in this case, to simplify it more, we're going to use just a CVD line. It's the same thing. It does the same movement, but it's just in the form of a line, which is, I guess, for a lot of people might be easier to read. So we're going to delete the CVD candles and we're going for CVD lines. Where to find the indicator? It's going to be Cumulative Volume Delta line, this one right here. So you type it here in the search bar and you're going to find CVD line, okay? By Coley Cold. All right, that's the dude. There you go. So free indicator, of course. Let's get into it. So in the comment, the top comment, I'm going to put a link to the main video about CVD that I did before. So you can have more of an introduction of actually the candle CVD and also exactly the logic behind it. You'll have a better understanding. This one is going to focus more on how do you actually use it in real time. What does it look like actually on the chart? I am going to go through a bit of an introduction here, just quickly. Again, watch the other video if you want more explanation. But there's two kinds of CVD divergences. There is absorption, where price is making a higher low and the CVD itself is making a lower low. This one is absorption. It looks kind of like what you would call a hidden divergence if you were doing RSI divergences. It's the same principles in terms of what it looks like on the chart, okay? So lower low here and higher low here, which is telling us that we have more market sellers at this point than we had here, more market sellers here, yet price is not going lower than this low. That's telling us that there are limit orders that are buying up all of this selling pressure. And that is eventually pushing price up. Then you have the CVD that flips up like here and starts pushing up. That tells you that now the market buyers are also back in. Okay, so absorption. Exhaustion looks a little bit different. It looks more like a regular RSI divergence, you would say. So price is in an uptrend, but is making a lower low, slightly in this case, lower low, and the CVD is making a higher low. So in this case, even though price is going lower, we're within an uptrend and the market sellers are just not there. They're exhausted. They're not that interested in that move, okay? So you can take a screenshot of that if you want to have a very simple visual understanding of it. And now we're going to go to the charts. So let's go here. This green line here, by the way, that's the daily open. So we're not comparing whatever the CVD has been doing the previous day. We're not looking at that. We're looking intra-session, right? This is the Asian session. We're going to look at London and New York as well. We're going to look at different days, different setups, different kind of market kind of context. So let's look at it here. So this is Asia. This is the true Asia open for me, like 7 a.m. This is when the volume really steps in, but it actually starts at 5 a.m. The daily open is at 5 a.m. Okay, so day opens, we have a bit of movement here. We can see already that we're putting some lows, obviously, on the RSI. We have an area of support, which is building, right? We pushed up, test, support, support, and then we go back down and it supports again. Here is a loss, and maybe because I wouldn't have been, this is not a real trade that I took, by the way, but this is just an example of what a divergence looks like. Here we have absorption, okay? So that's the first example where the CVD is making a lower low, so there's more market sellers, and yet price is making a higher low, all right? And we have a bullish engulfing candle. So you would have entered here, you would have been stopped out by this wick, and then it went back up. And that's what's going to happen sometimes. But actually longing from here, was it the best, considering this was a better area of support? That's fine. Okay, so an example for a loss. So I don't want you to show you only a perfect trade. Here we have the second example. So we had absorption. That was the first trade, and exhaustion. So let's look at what exhaustion looks like on the charts. So this is a very interesting trade for many reasons. So first of all, we have a divergence from this low to this low. We're going lower on price, but we're going higher on the CVD, meaning the sellers are not that interested in that move. But what also happens, we're actually retesting that level of support that we've been building that whole morning before the open, and we're grabbing a low, right? So we have a little bit of what you would call, I guess, a liquidity grab, or however you want to call it. But we're grabbing the low, and then the CVD is pointing back up at this point here, so we can enter long. We have our engulfing candle. You could enter here, but I don't have an engulfing candle. The CVD is not that clear. Here for me is the true confirmation, and then you can aim for these highs, okay? You got support, you got liquidity grab, and the more patient you're gonna be with your setups, this one was not ideal perhaps, the more patient you're gonna be with your setups and look for, you're gonna miss some setups of course, but you look for your areas of support resistance. I cannot go too much into support resistance right now because it's gonna make too long of a video and I don't wanna talk about two things at the same time. But you have an example here. You have an area of support, you're grabbing some lows, grabbing some liquidity, and then you have your market buyers entering. So you have the perfect kind of a storm here. Okay, moving on to another trade, an example of what not to do. Going against the trend. Our first rule, by the way, we go against the trend, we trade at support or resistance. We go with the trend, we trade at support or resistance, or we trade bottom and tops of ranges, and we see if we grab some highs or some lows. You don't need to have all of that, but the more you have, the better it is. In this case, you have a pretty strong divergence here, actually. This one is absorption. You have more buyers on the CVD, but yet price is completely failing to make a higher high, okay? But you don't even have a strong bearish engulfing candle. But either way, you're not going against that super bullish trend, okay? Now, you wouldn't really have any clear setup here on the way up. You would have one here. This was London session, by the way, and here you have a very nice setup during New York. New York opens on this candle at 8:30 p.m. for me. And what happens? We had a low created just an hour before New York open. We had a low here at a level, you could say, a decent level of support here. Excuse me. And we go back to this area, retest it, and look at how big that divergence here. This one is absorption. We are making a lower low, much lower low on the CVD from here to here, but we're making a pretty decent higher high on the CVD. We're not taking any lows, but we are bouncing from that area of support here, and we have a strong bullish engulfing candle. Now what happens, we do have a range here that forms, which would not be very comfortable to be staying in that trade, to be fair. But look at what happens within that range. Check out that, I'm gonna just move this. Check out that range here. Look what happens. We're making equal lows at the bottom of the range, but we're actually having quite a bit more market sellers, right? CVD is going down and down and down, and yet the price is staying at the same low here. You can see also there's a tiny little liquidity grab. This candle ends up grabbing this low here, and then we push up, right? So even though you would be worried about this trade maybe a little bit because you're staying kind of in drawdown or break even for a while, but seeing the CVD drop and price just ranging and staying in the same area is a pretty good sign, right? There you go. So that would be a win. Moving on to the next day, so new day. We're now entering Asia pre 7 a.m. So an hour before the actual 7 a.m. open, we have a first low that is created. we are testing again, not going too much into, yeah, I'm not gonna change time frames. Not gonna go too much into support and resistance. Let me find my area of backtest here. Not going too much into support of resistance, but you do see, yeah, that's the one, no? This would have been a 15-minute order block. This is the 5-minute, but on the 15 you had a clear, if you want to call it that way, order block, meaning you have an area of consolidation and then a strong push up. So if we retest it, it's a powerful level. You can see we retested it once and had a strong reaction to it. And then during the Asia Open, we retested, grabbed the lows, once again, isn't that amazing? And at the lows, what do? We have two divergences, one from here to here. So from here to here, that's one divergence. This one is exhaustion, right? It's the second kind of divergence. And you have exhaustion here as well from, well, you don't have a clear low on the CVD, but you can see that, oh wait, no, I'm wrong, I'm sorry, you don't have a divergence here, do you? Oh yeah, you do. Here to here, yeah. Okay, it's kind of a weird one to draw. But from this here, you're higher here on the CVD, look at the CVD, and you're lower here. So CVD is going higher, price is going lower. And eventually, so we have two divergences in a row from two separate kind of areas, let's say. And then you have your confirmation. You could have taken this maybe, but I would have needed a bit more confirmation. And then you go. You have a very nice trade for yourself here. Let's look at what happened here. Yet another divergence from this low to this low, big divergence too, way deeper lower low here on the CVD and way higher high. And you have, again, you could enter here, but I like to see the CVD start tilting to the upside, right? So it's telling me that the market buyers are now entering. Here at this point, let me zoom in a little bit maybe. On this engulfing candle, you can see the CVD is still flat at this point. I wanted to see start, having a little push up, and that's what you get here, right? Now you know that not only we had absorption, but we also have the market buyers entering as well, okay? So these are all great setups. I think I didn't look at anything else here for now. Let's go back. I think I have some other examples before in a kind of rangy situation. Let's see what we got here. Okay, so let's look a little bit at the trend. We are in a downtrend from the previous day. What I would have looked at, I don't know if I would have taken any trades there, to be honest. I don't know. I would have, you have to feel it in real time. If you're not confident with this kind of price action, just wait for days that are trending, go trade an asset that is trending more. I like to trade gold and also NQ a little bit, but with a different strategy. NQ works also great with the CVD. Okay, so the reason why this is rangy is, and I would have been willing to take some range trades here, is because you had this huge strong move here during New York, and usually Asia tends to range quite a little bit. So let's look at what the CVD did at this low here, for example. Simple. Higher low, way lower low from here to here, and higher low on the CVD. So we have exhaustion. You wouldn't be too greedy. Again, when it's kind of rangy and a little bit against the trend here, you got to, it's kind of against the trend. Excuse me. I would not go for, these highs 1 to 2, 1 to 1, 1.5 maybe. Here, what we have also after this trade, we have an example of actually you have a bit of a divergence here, you could say, because price is making a high, we're pushing down. We do have a pretty strong engulfing bearish candle here. And we have from this area here to here, you would say there's a divergence. Like we're way higher on the CVD here, but we're making a lower high from here to this high, here to this high, right? But what you don't have is really the CVD pushing down, right? You have this candle, which is bearish, but the CVD is still going up. So you don't have the market sellers really entering yet. But it does happen here. We have, again, a lower high from this high to this high, and a higher high, way higher high here. And on the CVD, you can see now it starts dropping. Right? You now have a, and this is where, okay, let's go now. This is interesting. Let's go maybe for this particular case. This is why I use more the CVD, let's say the regular CVD, is because, let me close this for now. It's more clear on the candles. That's why you should use the CVD line, at least at the beginning, and you can have it as a second option. But if you look at the candles, you can see now why you wouldn't short this one. This strong bearish candle actually had quite a bit of buyers there. Now, on this situation here, you have still your divergence, but look, now you have sellers entering. You can see it because you have red candles. These are market sellers on the CVD, confirming to you that they're back in. And again, you have a level of support here, a resistance rather. You have a bit of a head and shoulders kind of pattern. You would see it better on the 15-minute maybe, but shoulder, head, shoulder here, and kind of a second shoulder, I guess. But there you go, okay? So I guess we can stay on the candle CVD for the next examples. What happens here? Beautiful divergence. Again, this is during Asia. Lower low, okay, lower low here. A wick that grabs the lows, and here higher low on the CVD. Is your level strong? It's decent. I think if you go to the 1 hour to the 15-minute, you could draw some pretty maybe cleaner levels. I do my technical analysis from the 4 hour all the way down to the 5 minutes. 4 hour, 1 hour, 15-minute, 5-minute. But you would have a nice level here, I would say. And you grab some lows. I mean, that's a very nice setup. Your entry is kind of difficult in terms of stop loss, you know, because where do you put your stop loss? I guess I wouldn't put it here, that's for sure, but I would do something like this maybe, you know. There you go for this trade. Here you have a bearish divergence. Yeah, pretty strong exhaustion here. I wouldn't take this trade because you don't really have a level of resistance. You're in the middle of that gap there. There's this resistance, but it's way higher. You're going against the kind of the morning trend, so I wouldn't have taken that, but works out great. And here at the bottom, you have a better level of support resistance. Again, this is not clear. I would look at it on higher time frames, but you could make an argument for that, maybe. And here you have a nice divergence as well, do you? Yes. Look at this. From this low to like, you can see price going up, and here CVD going down, and then look at this candle on the CVD. Huge green candle. So your entry, to be fair, would be a little bit late here. I wouldn't take that trade. Look at that, because yeah, I wouldn't take that trade. It's too late of an entry. You want to be entering maybe from this candle, right? Let me zoom in. You would be wanting to enter from this candle, and it closes above that little range. That's nice. But look, on the CVD, it doesn't look that great. You don't have a strong green candle here. So maybe no trade in this case, okay? What do we have here? That's a nice one. I think that's during New York. Yep, during New York. So for my New York traders, you have some great setups as well. Strong divergence from this low to this, yep. Okay, strong CVD divergence. You got your big green candle on the CVD, and you're breaking above this level of support resistance here, right? You're breaking above this range, retesting it, and then pushing up with what? With a absorption CVD divergence. These ones we went through already. So yeah, I mean, you have to backtest that for yourself, but it's just so powerful. Such a great indicator because it's telling you what's going on behind the chart, you know, and now you're seeing, okay, wait, I'm seeing price go up, but you know, I'm seeing a higher high, but what are the buyers and sellers actually doing? The market buyers, sellers, what are they doing? And also, you don't see the limit orders, but when you see absorption, even though you don't actually see the limit orders, you can make an assumption that there are limit orders in certain areas because you're seeing absorption on the CVD. So it's telling you everything you need to know. If you take your trend properly or your ranges properly, if you find your liquidity grabs, if you find your right levels of support and resistance, and you bring the CVD in there, it's crazy good, guys. If you do your homework, do a lot of back testing, okay? On what, if you're not trading gold, do it on NQ, on Bitcoin, whatever you might be trading. Figure out which session maybe works the best. Is it Asia? Is it London? Is it New York? Figure that out for yourself because I can't do the homework for you. All I can do is show you what I'm doing, how this works, and it's just 100 times more powerful than most of the other indicators. And believe me, I've tried so many indicators, and I've traded them live and back tested them, and it's just, this is like the most powerful by far. Yeah, that's it for me today. I think that's it. So again, I'm gonna pin the previous video. I'm gonna pin it in the comments. I have another video coming up for a strategy that I'm trading, which is kind of a breakout strategy, I would say, which I trade for just an hour during Asia session on gold, and then just 30 minutes during New York session on NQ on the 1 minute. So this is for the people that just want to trade for a very short amount of time, that don't have hours to spend in front of the chart. CVD I find is already pretty good for that if you just trade one session for a couple hours. But if you have even less time than that, maybe 1 hour or a half hour during the day, I'm going to put out another strategy that works great on the 5 minute and the 1 minute, depending on what you're trading. So this is what's coming up. If you found this useful, guys, just leave a comment. Let me know how it's going for you, how your backtesting is going, and drop a like. That's amazing. That really helps out the channel, really. I appreciate it. I'm not selling anything on this channel. I don't have a lot of subscribers, and that's fine. I just really love making these videos. But if you want some more good content like this, well, consider subscribing, and I hope to see you guys in the next video.